So today's rule for the day is never average down a losing position. So I'm sure you've probably heard about this so many times, but the way you would actually average is average up. And what I mean by that is, say you've taken 100 shares or 100 stocks of a particular company. Now the stock has gone from 100 to 200. Now what you would then do is you would buy another 100 or buy another 50 as it gains higher. And by doing so, you are then averaging up your position so that you get a more favorable average over time. This is if you're a long-term trader. Now, by averaging down, what it means by that is if you've actually purchased a stock at, say, 100, now the stock's gone down to 50 and you're still buying at 50. And then it goes down to 25, you're still buying at 25 in the hopes that one day it's going to rise up again, but it ends up like going all the way down to 5 and you've lost a lot of money. And there are a lot of stocks that do that. So, if you just look at the top losers for the day, you look at the stocks that have gone to the all-time lows, you'll find so many of these. So be careful. Never average down in the hopes that these stocks will rise again. Another example for you is the big mega stocks like Facebook too has seen a big considerable decline of over 30-40%. Alibaba is another stock that's seen a huge decline over like 50% now. So keep that in mind. Not the biggest companies will also keep you safe. Always average up rather than average down. So I hope this was helpful, and stay tuned for another video coming up soon.